back to Davos, Switzerland, here at the World Economic Forum. 3 million and counting, according to Americans for Tax Reform. That is how many workers have benefited from bonuses, wage increases, or other financial windfalls due to the changes in the corporate tax code. This comes as a new Fox News poll shows that 40% of those polled believe the Trump administration has made the economy better. Joining me right now is the chairman and CEO of BlackRock, the largest wealth manager. We're here with Larry Fink. Great to see you, Larry.
Hi, Maria.
Thank you so much for joining us. So, BlackRock added $1 trillion in assets last year. Congratulations.
Thank you.
That is pretty incredible.
Well, much of it had to do with the markets.
Right.
I mean, the markets were extraordinary worldwide. And but from our clients, they added another $380 billion.
Yeah.
And so you could say about $620 billion was a market appreciation, and the $380 billion was new money.
So that was new money coming in because people want to be invested in stocks as they see the stock market going up.
We actually saw quite a bit of interest still in fixed income as people are rebalancing, as the equity markets get stronger. Some organizations need to have an asset allocation model, and as equities go up, they rebalance and they move more into fixed income. So it's very dynamic, but I would say, if you're looking backwards to 2017, it was a pretty, we saw flows in our alternative space. We had large flows just in cash as short-term rates are going up, and we had large flows in our multi-asset area. So it was pretty broad. A couple of interesting statistics. 67 products added $1 billion last year, and 13 countries added $1 billion. So it was broad-based and global.
Do you see countries changing investment strategies and putting money into areas where they feel the tax benefits are there? For example, the U.S., obviously, and also France. Do you see people changing their investment plans based on what we're seeing in this tax package?
Well, it's my hope that investors worldwide start recognizing that it was bad to be in cash. We had a 3x increase in our equity markets. 3x since the financial crisis. There's more money sitting in the sideline than we have ever seen at this moment. In France, as you named, France has a specific problem, and the president and the finance minister are trying to address. 72% of French savings is in a bank account. They don't invest over the long run. And imagine the world economy if people were managing their savings to meet their long-term obligations, retirement. So if they had money properly placed in the needs, in the duration of the assets, meaning if your retirement is a 40-year obligation that you invested in equities over the long horizon, how much more economic vitality we would have seen worldwide.
Yeah.
In China, one of the greatest drags today, despite it's growing at 6.5%, the Chinese now are saving 45% of their disposable income because they're frightened of the future. There's not a safety net there for Social Security and health care. The one child policy has now had an impact. Those who are rising to the middle class, they're now preparing to help their parents as they go into retirement. And so this is a worldwide phenomenon. In the United States, the biggest phenomenon is the undersavings. And what's really concerning me, we have the strongest economy we've had in 12, 14 years. We have huge wealth creation in the equity markets, but we don't have a large, broad participation in the equity markets. And so this is something that I'm very focused on. And it's ironic. Everything feels good, and yet the anger is still around, and you see it worldwide.
Yeah.
And I believe there's just a fear of the future, whether it's from technology. If you're a truck driver and you read all about autonomous trucks, you're going to say, well, oh my gosh, what will happen to me if indeed we do have driverless trucks?
So you want to hoard cash? Put it in a savings account.
Correct.
Yeah.
And what they should be doing is investing in a broad portfolio. And I think this is one of the real problems. And one of the things I discussed throughout Davos is we need to focus on financial literacy. We need to have more of the population understanding their needs. As we moved away from the defined benefit plans to a defined contribution, we put all the responsibility on the individual. And we haven't given them the tools to properly navigate that.
Yeah.
And that's to me, that's a big social problem in the United States and worldwide. If we this is one of the reasons why BlackRock is embracing technology. We believe we could use technology to help financial literacy and help people navigate the huge obligation of saving for retirement.
Yeah, I mean, if there's one lesson to be learned from last year, it's you really want to be long-term in equities.
Correct.
I mean, your firm now at $6.3 trillion in assets. That's incredible, Larry. Larger than, balance sheets of entire governments. What do you want to do with that? I mean, you've been using your powerful position to encourage companies to do the right thing, encourage this financial literacy. How can you do that? Tell me how you could really move the needle on that.
Well, everything's incremental. I'm not sure we're going to be responsible for any major change, but I believe we need to change the dialogue. And so this is the 5th year I've been writing these corporate letters. As the largest shareholder of many companies in the world, and in case most of those assets are in our ETF or index products. And in those products, Maria, even if we hated a company, I can't sell those assets in an index fund. In my active management, when we don't like a company, you don't own the stock.
Right.
So in an index, we have to own those companies. And so therefore, we own a lot of bad companies and a lot of good companies. That's an index. And we believe more and more money is moving into ETFs and index over the next 5 years for regulatory reasons. As a result, there's a deeper and deeper responsibility to focus on the long term. And what we're telling CEOs and chairmen, more and more of people's money are going into index funds.
Yeah.
That means that's a good thing for you because you have long-term money that is interested in investing in you. However, you have an obligation. You have an obligation to manage your company for the long term. There's no question. I'm a public CEO. We have to manage to all our investors. Some of my investors are short term.
Right.
But most of my investors are investing in BlackRock over the long horizon, and they've done very well. And so my corporate letter this year was talking about focusing on the long term. Please identify what your long term strategy is. Please tell us that you discuss that long term strategy with your board. And then I made a broader statement that I said companies need to have a purpose. And the reason why I said companies have a purpose, when employees understand the purpose of a company, it becomes a cultural carrier. It builds a community with the employees. And as you know, when you have a strong community of employees, generally companies do better.
Yeah, it's a great point.
And if your clients connect with that purpose, they'll do more business with you.
Larry, let me ask you this. What keeps this going? I mean, what do you worry about in terms of the risk? What keeps this broad market strength as well as the broad backdrop in the economy, which is very optimistic? What keeps it sustained in your view?
Well, generally Davos is wrong. Last year there was a little more pessimism. This year is abject euphoria. So
it's a contrary indicator.
Yeah, so let's just be aware that consensus is broadly very positive. And I actually believe for a good reason. As I said, we do have global growth worldwide. We have a strong China. We have a strong U.S. The tax reform in the United States is going to add 0.9 to 1%. We're pretty bullish on what it will do to the economy over the early years. And so we were growing at, let's say, 2.5. We would not be surprised to see the U.S. economy growing at 3.5. No one wants to talk about Japan anymore, yet it's the third largest economy, and it went from zero growth for almost 30 years and is growing at 1.5%.
Yeah.
So worldwide, we're seeing growth. So what can go wrong? You have potential political instability. You could potentially have trade problems. And probably the most problematic issue, could we see rising inflation, and which would mean acceleration of central banks' behavior. So in our case, we have very aggressive fiscal policy that was very necessary. At the same time, we're going to have restrictive monetary policy. And depending on how fast that monetary policy is restrictive in terms of raising rates, could that mollify the success of the fiscal policy? We are benefiting by huge flows into our treasuries because the differentiation between our interest rates and Europe's interest rates and China's and Japan has created huge demand for our products. There could be a scenario in which that some foreigners are not as interested in their treasury. I don't think that'll be the case. But if that's the case, we have a problem because unlike Italy and Japan, where they have huge debt to GDP, but they have domestic savings that are paying for those deficits. We are the largest economy that is reliant on foreigners buying our debt.
And there was a report recently that basically said the Chinese are rethinking it, so we'll see about that. Yeah.
And I would just say, we have growing deficits.
Larry, good to see you. Thanks so much. Larry Fink.